Hey traders, Dr. Barry Burns here with Top Dog Trading, and I've got a very powerful Forex setup to share with you today. It's very simple. There's only 3 steps to it, and I'm going to go through them fast, but it's easy. We'll give you a couple of different examples. So here it is. It's similar to a double top. We've all heard of double tops, and double tops are okay, but this is even better. So let's bring up our horizontal line. And what we want to do is pick a spot in the chart where we get a fairly major swing high. So for example, here we see that we've got a nice little move up. Let me turn this arrow blue. All right, and we come up here. So this is our resistance level. Market comes back down, then it comes back up to retest, or I'm sorry, actually to test this resistance level. Now here's the key. If it just comes up to this level, it's okay, but it's not as good. What we want to really see to make this powerful is we want this high to be pierced. Not quite broken, but to be pierced. In other words, we want to see price action coming above that high. Now, the key to that is the candlestick pattern. 2 aspects to the candlestick pattern. Number 1, we don't want there to be a commitment of buying above this high. So in this particular case, this is actually ideal because we just have the wicks or the shadows, which are the black lines, and not the real bodies, which represent the area between the open and the close. So in market profile terms, this would be called a rejection of value. In other words, the market has tested these prices above this high. It has experimented with them, and there's been some buying and selling up there in this price level. But then it rejected those high prices, and that's the key, and that's what the wicks really tell you. And then we get a bearish bar coming back down, and the market closing way back down here. So all these price levels up here have been tested, and the auction place of the currency market has rejected these price levels and said, no, we do not find that right now. The consensus is that in this case, the euro is worth this much money, and therefore the value of that market is considered less during this period of time. So that is a fantastic short, and it's based on the philosophy that I just shared with you. That's really the principle behind this. I like to share with people why things work, what's the logic behind them. And as you can see, the market makes a major move down from there. Let's show you one more example. So this one is slightly different, which is exactly why I'm showing it to you. But it's the exact same principle. And remember, there are reasons these patterns work. The reasons have to do with the psychology of the marketplace, the value that people are putting on the market. So always make sure that when you learn a new trading method or trade setup, that you understand the market logic behind it, that there is a market logic behind it. People don't just say, oh, this pattern works. No, there has to be a reason, a logic for it to work in the future. So here's our high. See that very clearly. And then again, market goes and tests that high, and it goes a bit above it. Now this time it actually goes a little bit more than before. Before we just had the wicks of the candlestick, the black part. Now we actually get what? We get a close above that high. So a little bit more tricky, a little more of a commitment up there. But again, the low of the bar is below that level, and the high of the bar is above that resistance level. So there's not a real commitment there yet. Then we get a doji bar, which is a neutral bar, opens and closes right in the middle of the range of that bar. And the bar that follows that is a complete, again, to use market profile terms, rejection of these price levels up here. And we get a red bar that completely comes down, closes back down below that resistance level up here, and in essence rejects these higher prices. This 3-bar candlestick pattern then is, just drawing over myself here, but that's okay. That 3-bar candlestick pattern is your signal that these upper prices have been rejected, rejection of value, and we can expect the market to go down, which again it does quite significantly. So those are the 3 parts. Quick review, simply looking at number 1, a price level of resistance. Number 2, for the market to test the levels above that resistance. Again, it can be support or resistance. We've looked at both sides of it here. And then number 3, a candlestick pattern that shows that it could be a 1-bar, 2-bar, or 3-bar candlestick pattern that shows that these values above that initial resistance level have been rejected. And when you see that, then we have a very high probability of this market going down because the higher prices have not been accepted by the marketplace. So I hope you liked this video. If you did, please click the like button below and also leave a comment telling me what you'd like me to cover in future videos about the Forex market. I'll be happy to do that. I'm very responsive, very interactive with the community here. I'm also giving away one of my courses called How to Trade Like the Pros. And you can get that course absolutely free by clicking on the image in the top left corner. Or if you're on a mobile device, that won't work. So go ahead and click on the little eye with a circle around it in the top right-hand corner of the video, or on the link in the description below. And if you're on a mobile device, that'll work for you. Either way, you get access to the course. Once you do that, I will personally email the first video in the course to you.